And final one here is this data that you've pulled out, which is about top quartile performing fund managers, which you guys definitely are. So what's that?
Well, when we set up the fund, Luke was crunching numbers deep in the weeds.
Classic Luke.
Analysing the peer group.
Everyone thinks I'm just a mouthpiece, but I do have a brain occasionally. Yeah, occasionally.
And he said, what separates a good quality small cap fund manager from a lower quality fund manager? And it was pretty much that, which is that everyone kind of loses roughly the same in the down markets, but it's how much they make in the up markets, which influences whether you're a top quartile fund manager over the long term. So that's
fascinating.
Yeah. So, if you go through a bottom quartile, the actual work I did was on 5 years to June 30, 2024. And if you look at a average top quartile manager and an average bottom quartile manager, they roughly lose about the same amount. I think it was 27 and 31 or something like that.
Right.
In drawdown.
Max drawdown over that period.
Yeah.
So, everyone's getting torched roughly the same. But it really was about how much money you could make in the bull market, and could you adjust your portfolio at the bottom of the market and capture more alpha on the upside. And I think that's something that, retail, I don't use mum and dad investors at home do poorly, is they think the bottom of the market's the worst time to sell.
Yeah.
It's actually not. It's a great time to sell if you're going to rebuy and buy something better that's going to go up more.
So April was a good example, I think, where
we traded a lot.
Our fund was down, the benchmark was down pretty hefty, and we actually recovered it.
Positive month.
We traded, recovered it in positive month.
Yeah, and
that was with the Trump tariff stuff.
With the Trump
tariff stuff. So, bottom of the market, I think market was down 8 or 9% intra-month, and then it closed up, I'm going to call it flat. I think it was flat. No, we're more than that, because we closed up 2.15, I think, top of my head for April, and the market was maybe up 1.5. No, you're right, 1.5. Yeah. So, it was really about how much you can get out of the hole, not so much, how much you were in it.
Interesting. That's fascinating. I've never heard that.
Everyone's in it. No one's out there.
Everyone gets the same.
Everyone gets
on the way down.
Everyone gets whacked. Yeah.
But on the way up is where you get the reps in.
And I think that's, counterintuitive again to natural investor behavior and behavioral finance. It's like, I need to avoid losing money. No, you don't know how to make money. That's your problem.
Yeah, interesting.
It's actually all about the offense.
Interesting. Well, that's what you pay small cap fund managers to do anyway, right?
Yeah, for sure. 100%.
Yeah. Well, this has been
don't pay them as the case may be.
Or don't pay them if they don't perform.
yeah, exactly right.
Well, this has been heaps of fun. I'll put links in the show notes to all the stuff, as well as the back catalogue, so people can go see the proof in the actual pudding.